fusion of social media and investment insight.
We want to start just by thanking all of you for being here and thanking the organizers of 1 Million Cups. So raise your hand for me if you own stock in a company. Raise your hand if you have a financial advisor. Raise your hand if you do your own investment research. Okay, regardless of what kind of investor you are, there's a couple ways that you might get your information. You might go through brokers, advisors, and banks. You might consult your family or your friends. You could do your own investment research, or you might subscribe to premium services. However, there are some serious issues with these sources. They all come through a manipulated filter. They're not peer-reviewed. They can be very time-consuming and extremely costly.
Tribunit solves this problem. We provide our members with a complete ecosystem for investment analysis. Using our value application, we allow an individual to enter a ticker and are provided the intrinsic value of the company. This intrinsic value is the inherent worth of the company and may be different from the current stock price. According to value investing theory, when the intrinsic value of a company is higher than the current stock price, an investment opportunity may be present. On the other hand, if you own a stock and the intrinsic value is less than the current stock price, it may be time to sell. Our goal is to provide our members with the ability to value companies and understand the value of the companies they own or are interested in owning so that they may make well-informed investment decisions. Our solution is high quality, affordable, transparent, fast, and accessible. We have developed a comprehensive prototype that challenges current information resources. Even in prototype form, our platform provides a complete system for individual investors, the academic community, as well as professional investors. Here's where an individual investor might go to get information on a stock. Let's use Whole Foods as an example. As you can see, there's some high-level data. However, it's not really comprehensive, and it really doesn't give you a good indication of whether the stock is a buy or a sell. In addition, the stock price of $53.79, which has since gone down in the past day, that is not necessarily the intrinsic value of the company or the inherent worth of the company. On Tribunit, you can clearly see on a color-coded scale whether or not the company, Whole Foods in this example, is undervalued or overvalued. In this case, we determined the intrinsic value to be about $72, and therefore an investment opportunity may be present. In addition, the data is organized and easy to understand. Professional investors, on the other hand, typically buy analyst reports such as this. You can clearly see how it's very complex and comprehensive. However, it's in PDF format. Typically, professional investors like to run scenario testing or sensitivity testing of the intrinsic value model, which isn't really possible when you have a PDF. However, on Tribunit, for professional investors, they have the ability to see 10 years of historical financial data and are able to change any of the assumptions to project the future prospects of the company. From that, they can calculate an intrinsic value. This solution is flexible, transparent, and extremely useful for professional investors.
Outside of the individual investor and professional investor market, there's absolutely an opportunity within the academic world. This is an example of a spreadsheet that a student might use to value a company. However, it requires manual entry of the data, and there is a lot of it. This type of financial modeling is time-consuming, and students are prone to making mistakes. A finance or accounting student using Tribunit, however, might visit a page such as this, where the data is automatically populated for them, it's displayed in graphs, and it's easy to play around with. Now imagine this flexible, transparent platform built within a social, collaborative community. That is what we have built. The next evolution in social media and knowledge management is the creation of knowledge media communities. Members of our community have the ability to collaborate with each other and have access to an information exchange. So how are we different? The Tribunit concept moves away from the institutional investment approach towards a more collaborative one. Members of our community have access to data and analysis that is completely transparent, therefore it's trustworthy. Our members also have complete ownership over every single assumption that drives the model. So our target market includes individual investors, professional investors, as well as the academic world. There are over 250 million individuals in the United States that currently own stocks. Within that market, there's about 1 million professionals and 580,000 finance and accounting students, all who would benefit from becoming a member of Tributed.
We are currently in discussions with development partners to bring our prototype into a web app that will be both modular and collaborative. In addition, it'll include features such as a stock screener, a watch list, as well as performance tracking. In addition, we are also in discussions with a data development firm that will help us develop our strategic long-term competitive advantage, our data warehouse, which will interface directly with the web app. As soon as we solidify these development partnerships, we intend to begin development of our web app, and we'll bring this to market in 9 months to a year. Thank you so much for your time.
Questions? Yes.
What do you see as your different revenue streams once the application is up and running?
So it's a membership-based revenue model, which is our main revenue, but we have a lot of other streams that we're predicting. As soon as we start development on the web app, we can have in-web app revenues. So different modules, different data sets, different private company valuation eventually, different things that different levels of membership can pay extra for. So in-web app revenues, but the primary revenue model is membership-based.
What would the base membership cost? What is your projection there?
We're still kind of playing around with pricing. We're doing a lot of testing in the market. It's going to be a basic membership. We're thinking around $30 for the month just for an individual investor. And then, here, I'll let you finish that one.
We are also looking at a freemium model where we will allow a fair amount of access for free into the web app. However, to receive advanced features, you'll have to eventually either pay for the membership or at the same time, a single one-off transaction to, buy something that would otherwise be included in the more membership model base.
Have you evaluated any liabilities you may have with, say, your system says a stock is undervalued and your members buy and it tanks?
Disclaimers, disclaimers, disclaimers. We are not an advisor. We are just an information provider, if anybody asks. So we just got a legal team on board, and they're helping us develop all of those disclaimers and stuff so that we're safe from that. Yeah.
I'm not that familiar with a TD Ameritrade app that they have, but I have seen some ads for it that sounds like it does some of the same things you do, where you can take their information and you can tweak it to change the assumptions and see what that does to the valuations. Is that, are you competing against an existing product sort of there, or is there enough differentiation, not being familiar, really intimately familiar with theirs or yours? Is there enough differentiation there and enough room in the marketplace for more than one player?
I have not necessarily seen that exact platform. There are absolutely other similar products that are coming out into the marketplace. However, I think what is going to differentiate us, at least in the short term and eventually well into the long term, is our social platform that we are creating, the collaborative platform. We are providing this awesome this ecosystem that allows you to value a company. And while it's fairly mechanical in nature, in the long run, as we get more and more people willing to contribute to our site and help us build that out, we will have a breadth of data that we will start accumulating, and from that, we will have a very important platform that will help us differentiate us from the TD Ameritrades of the world that may be, using that internally for proprietary purposes, for their own trading purposes, where our goal is to democratize this platform and to allow any member to get this type of information.
Yeah.
Who is your target market?
So individual investors, initially, just because we need to build out more advanced features. Some of the features right now are appealing to professionals, but we're eventually going to make them even more appealing. So we're going to start by just marketing to individuals who want to learn how to invest or know and just want a platform to play around with. And then we're also going to get into the academic market. That's actually how Joey came up with this idea. He took an equity analysis course and had to literally plug in every single revenue 2010. Revenue is just awful. So
The
he built
example in
this.
there from the academic was my one
Yeah.
in that class.
So he built this for himself in school. So the academic market is going to be a good market, but also individuals and then eventually professionals as we increase the quality of our evaluation application.
You compared, excuse me, the readily available stock evaluations such as S&P with the one that you provide. Now, do you have your own army of analysts working this out, or is that the result of the collaboration of your subscribers who generate that screen that you showed, which was the intrinsic value? I'm sorry, you know what I'm saying.
So currently, we do not have an army of analysts at our disposal to help us do this. However, we do have a lot of friends that, I was a master's of accounting student. I graduated with a class of 100-some people that are very well versed in doing this. And I think being able to leverage that alumni network will help us start building out this, the content on our platform. In addition, I mean, I will be doing a hell of a lot of the grunt work to get this off the ground and analyze. My goal is to analyze every single company in the S&P 500. You know, it may take a year or so time to put in the amount of effort, but as soon as we start getting one or two per company on this platform, it'll start sparking a discussion. And from that, you know, people will say, I don't agree with what you're doing, I'm going to do my own. And from that, you know, we can start really amplifying our effect in the marketplace.
But you will initially have your own up there that's generated internally within your
Absolutely.
Yeah,
I should
okay.
describe that a little bit more. So valuation is the software, but we also have a kind of an ecosystem or a marketplace called Exchange. So if you value a company, you can write a report on the company, post it to Exchange, buy and sell reports among the members. You can actually make money doing this. There's credibility mechanisms, so you know you're not buying a report from some 14-year-old on his mom's computer. But so that's the information exchange aspect of it. You can buy and sell reports on companies. You write up a little blog about why you think it's over or undervalued. So that is going to be a little bit of a chicken and egg problem in the beginning because there won't be any reports out there. So why would somebody come? There's no reports to buy. So that's where we're going to produce a lot of the initial content and then gain traction that way.
Have you considered doing a free full-featured use for students? I know I'm an attorney, so
Yeah.
when I was in law school, we had free LexisNexis, and of course, then when you go to work for a firm, you're hooked on their platform.
Right, yeah, obviously students don't have a huge disposable income for stuff like this, so we will make it much cheaper for students once we get there. I mean, they can absolutely use the freemium model, the advertising-based free model, and then we also might partner with professors, get in with some universities to maybe package this with a course, so that maybe the university ends up paying for it for a class of students. Those are all kind of options.
Part of our strategy is we want to get the academic market hooked in initially. If we can, you know, get this integrated within a course offering, so, you know, part of your curriculum is you need to buy access to our software, and if we are able to, you know, put a low price on this, or offer a cheap access to this, we are able to get students onto our system quickly, and then once they get into the professional market, they will hopefully take that momentum and that appreciation from what we have developed and bring that to their managers and say, we want to use this within our current data offerings that they have.
Having been involved with some small cap stocks years ago, one of the things that I saw stock owners, managers scam the hell out of people by pushing stuff onto sites like this, trying to blow up the stock price. How are you guys going to manage being a social media platform, keeping these people from doing that kind of stuff and basically lying to people of what the stock is about?
And that's what we're trying to fix.
That's what we fix, yeah.
We are providing the data and the analysis that allows you to understand the intrinsic value of the company. Yes, you can change the assumptions and, you know, make it look like it's going to become the next best thing and therefore the intrinsic value of the company is large. However, being in a collaborative community and having a complete open access, I mean, there's going to be other people calling you out on it in a forum that is attached to that valuation output. And
But all their speculation is forward-looking, and you guys are historical, right?
We provide 10 years of historical data and
Right.
then use a combination of mean reversion and Wall Street consensus to predict 10 years future, and that's kind of like our default. So that's the forward assumptions are what you can change,
Okay.
and then recalculate. The point is though that you can attach a PDF form or a form of evaluation to your report so that if somebody buys your report, they can dig through, it's all transparent. So there's really no hiding in the model, you have to show exactly how you calculated it.
Okay.
Yeah.
So I'm a little confused. I think my question is almost answered. So your report on each company starts with a baseline that is, it's built on an algorithm, so to speak, right? Like, and then the user can change assumptions and that kind of stuff. So the intrinsic value computation is already there. You don't need analysts to build this stuff out for you. It's already there.
It's already there, but you'd be wise to go through and check the assumptions and then change them to your liking.
So the biggest difference between this and Morningstar is that it's a social community and you build it out and mostly make it big and proprietary because all of us are willing to play and input data that eventually you don't have to do.
Right, it's also specifically value investing, but we also don't charge $100,000 a year like Morningstar and Bloomberg do for their data.
Morningstar
and stuff.
charges $200 a year to be part of Morningstar, maybe.
Well, yeah.
Morningstar, however, doesn't have an intrinsic value model that you're able to manipulate the data with and change the assumptions. I mean, the example that I had up there was a Morningstar report for Whole Foods. There was no way for me, they had we could go back to it, there's a fair value estimate that they put in there. I have no way to change any of the assumptions driving that fair value estimate that they have in the report. Yes, they provided a great analysis of the company, but if I can't change any of the assumptions, if I disagree with, in Whole Foods' case, I don't agree with their same-store sales growth assumption forecast, I don't know what the resulting value of the company would be then. And that's where our value is derived from.
Do you have any plans to implement a social media-based, algorithmic approach so that your users can affect the initial default values for the components of the algorithm that determines the value of the company, so that once you get rolling and you have a large user base, the default values that aren't necessarily associated with real-world situations because they're more generalized, is that something that is going to be part?
That's a fantastic question.
Great question.
Absolutely.
Yes.
That is a longer-term goal for ours. However, we really need to get the web app out first to, be able to start having users perform the analysis, and we can start gathering data internally from other users within our own site, beyond just going to, social media, which social media information is hard to quantify. It's hard to put it into an actual, there's more momentum behind Whole Foods, there's more likes. The increase in the likes of Whole Foods has gone up 10% in the past week. However, does that really translate to revenue growth? What does that mean for margins? And that's where we have to do a lot of research and development in the longer term to start quantifying the impact of social media and beyond that, many other different ways that currently with the availability of information in our society, that we are able to start quantifying that into a value-based system that is actually valuable for investors.
Yeah.
I just want to know what the name means.
This is Joey's thing.
Well, to begin, I started with the idea of a crowdsourced newspaper, and what this, and that's what the name started from. And what it is a legislative group that came out of the French Revolution that was basically a group of unelected officials, but were up there advocating for the people, because while the French Revolution, was hopefully for the people and helping improve democracy in France, there wasn't really a group that was truly advocating on behalf of the people. And the Tribunite was the group of 100 people that went up and talked about all the proposed laws as a result of the reforms of the French Revolution. So we are taking this to what is today our current method of democracy, and that is in the form of prices of stocks in our capital markets. You know, really frankly, a lot of our democracy is truly driven by our capital markets. Our decisions of our lawmakers are really dictated based on what they see in the stock markets, the ebbs and flows of the interest rates, and we are bringing democracy to the stock market and capital markets.
You know, I know there are a lot of models out there. There's a company in California called, I think, Tech Exchange, where they did this in '96. They get everybody basically to upload information about technology, they start sharing it, they start charging for it. Why is it taking you so long to bring this to market when there are many models for you to either collaborate with or work with or get it out there much sooner than a year from now?
Because, okay, so right now our prototype is built in Microsoft Excel. It's extremely comprehensive. It's probably the most insane Excel application you've ever seen, but that's not marketable. So we're taking our time to make sure that we find a database company that can help us, because the data is really where the value is, because that's going to be the long-term advantage. But we also need a beautiful interface. It needs to be easy for individuals to use, understand what assumptions are changing. So building that web application is going to take some time to make sure that it's really high quality. We want to make sure we're bringing a product to market that is. So in other words, our entire website is done. The entire community side of everything is already developed. Joey and I already built that. So you can go to the website, you can log on, you can sign up, you can write reports, you can exchange. That's all done. We're just bringing the prototype into a web application, and that's what's going to take the time to develop that out. Yeah.
Two-part question. Is your intrinsic value, you mentioned Warren Buffett, is your intrinsic value calculation based on the same elements he uses to value a stock? And the second part of that is, if you back tested, when you get a buy opportunity or sell opportunity generated, have you back tested any of this to see how it works against historic data?
So to answer the first question, yes, we do use many of the methodologies that Warren Buffett uses. Personally, I've crafted a lot of these ideas based off of the Benjamin Graham theory of value investing, which was alluded to in Warren Buffett's quote there. We use a little different, more complex model than what Warren Buffett does, but at the same time, Warren Buffett is well renowned to be able to value companies in his head without having to write anything down, any Excel. I mean, he doesn't even have a computer on his desk. And frankly, I can't do that, so hence why we
You don't have his staff either.
So on the other front, the other question, we have done a little bit of back testing. However, it's very difficult to back test value investing ideas, because at the same time you have to understand what the value of your company is in the moment, at that individual point in time. Yes, we have algorithms that help us get a rough value of what the company is worth today, and we have done some back testing which has had some successes and also some things that weren't necessarily correct. But at the same time, again, it's the personal insight, people understanding the stocks and then using our application that is really valuable.
As I understand it, Warren Buffett got to start with insurance companies, so he had plenty of revenue to buy stocks. So are we going to be differentiate between revenue-based investing versus capital gains-based investing?
Well, Warren Buffett, he did something totally different with something called float, where basically had free money from the insurance companies that he owned, and therefore was able to make value investing-based decisions based off of that free money, in essence, that he had at his disposal. However, we don't have that necessarily, so we just need to stick to making sound investment decisions and over time building up our capital and accumulating dividends based on, again, these sound investment decisions, which therefore over time, you know, probably won't become the second or third most wealthy persons in the world, but, you know, we'll hopefully get close to that.